Hi everyone, this is Alan Rosinski of Metro Manhattan Office Space. You may not realize it, but you can buy Class A real estate as an investment in a major metropolitan area for as little as $38. You didn't mishear me, $38. Now many people would like to invest in property, but they want to buy quality. And even in a small town, having hundreds of thousands of dollars or millions of dollars may not be sufficient to buy prime commercial real estate with a quality tenant or tenants. I know for a lot of investors, particularly those who are starting out, it's a trade-off, it's a decision as to whether to invest in the stock market or, if you have the means, property, maybe an apartment, if you live in a small town, maybe a small commercial building, a store, a small apartment building. And there's advantages and disadvantages of both. However, there's an answer for this. You can invest in real estate investment trusts, REITs, which are public companies where you can buy shares, and these REITs often own prime real estate. Now, there's a variety of REITs. Some REITs invest in hotels, some REITs are retail REITs, some are office, some are in storage space. But the ones that I'm thinking of are commercial real estate REITs in Manhattan, Vornado and SL Green. Now, when you invest in companies like SL Green or Vornado, the advantage that you're going to get is that they're really professionally managed. You have a potential for appreciation. You get a pretty good dividend, and they're affordable. You can get into these stocks. You buy a few shares every month. Let's say you're 25 years old. You do this for 5 years, and you'll be in pretty good shape when you retire at 59, or just keep doing it continually along with other stocks. The disadvantage of buying shares in REITs is, well, you don't have too much say over how the REIT is run, and the stock can be kind of volatile. But if you're relatively young and you have a long time horizon, it can be a really pretty good investment. Full disclosure, I'm not taking a strong position on these. I think these are interesting companies, and from my experience, they're very, very well run. And I've actually done deals with Vornado and SL Green, and I know they're careful about the tenants they take into their buildings. So the risk of default in their buildings by their tenants, I think, is maybe somewhat lower than many other landlords. Also, what you get when you invest in these companies is their portfolio of buildings is really impressive. Like if you buy shares in SL Green, you're buying a share of the Gray Bar building. You're buying a share of the Lipstick building, and they have actually an inventory of, I think, 44 million square feet in Manhattan, something like 97 buildings. Vornado is smaller, but they also have a very impressive portfolio. Among them, One Penn Plaza and the Fuller building and a number of hotels in Manhattan. So, I mean, these are really impressive companies with a terrific portfolio of property. I mean, I actually owned SL Green many years ago, and I sold it at a profit, and I regret it. I wish I had kept it. If you want to consider buying shares in REITs like SL Green and Vornado, it's a new way of acquiring distressed properties. Because what happens in a weak market is sellers take their assets off the market. Let's say you're relatively wealthy and you have a building which is worth $45 million, and you're in pretty good shape. And all of a sudden that property is worth $30 million. You take it off the market and you figure, in another 3 or 4 years, I'm going to be able to get my $50 million. So what's happened as a result is there's far fewer investment properties on the market. But if you look at a stock, at buying shares of a REIT, the pricing for those shares adjusts every day. And the pricing for the shares of REITs in Manhattan is considerably lower than it was a few months ago. So it's a way of actually getting a discount and buying shares at a lower price than they were at the height of the market when conditions were normal. but you just have to be confident that at some point in the future, the economy will stabilize and rents will go back up and default rates will be lower. I mean, this is an easy investment option. I've always liked investing in the stock market because of the liquidity. You're unhappy with the stock, you press a button and you're out. And in terms of purchasing real estate in an indirect way, you don't have the headaches of collecting rent. You don't have the headaches of property management. You have liquidity, you have a really good dividend with these stocks, and you have, of course, the potential for appreciation in the future. So it's something to think about. I'm not endorsing any of these companies, so I think they're very, very well run. If you have any questions, feel free to tweet them to me. My Twitter handle is at Metro Manhattan, and of course, please feel free to subscribe to my YouTube channel. And if you've had experience investing in REITs, I'd be very curious to hear about it. If you have considered and debated investing in REITs versus commercial properties, I'd like to hear about that as well. Have a nice day until the next time. Take care now.